Good afternoon and welcome to BizTech's Asian Midday Market Watch. Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, is our guest today. Now, Vishnu, thanks for coming on the show.
Good afternoon, Brian. Thanks for having me. Always a pleasure to be here.
Now, Vishnu, before we get your insights, we're going to take a look at how crypto markets have performed and also take a look at how regional markets have performed in the first half of the day. Bitcoin is at 18,811.8. It's down 6%. Ethereum is at 1,306.28. It's down 10.16%. Now, looking across the regional equity markets, Japan is closed today for a holiday. So we start with the SGX, which is down 0.35%. Bursa Malaysia is down 1.05%. Shanghai is down 0.11%. The ASX All Ordinaries is down 0.22%. The Hang Seng is down 1.09%. And rounding up the numbers, we've got the Kospi, which is down 1.08%. Vishnu, it's a sea of red. Tell us why.
Well, I think, to start off with, we've had a very soft close to last week. Post US CPI, you had US stocks falling on either side of 5%, depending on whether you look at the NASDAQ or the S&P 500. And I think going into this week, markets are coming to the realization that of not only that you should not fight the Fed, but instead perhaps you should fear the Fed, because if the Fed does, as expected, entrench some hawkish expectations, then that could really set off another leg down in markets. And I think it's a risk that they don't want to take at this point, given the rallies heading all the way into the early part of last week, just before the correction started after a pretty hot US CPI read.
Now, Vishnu, speaking of a hot CPI read, we've got a chill in crypto markets because Bitcoin is only at 18,811 and Ethereum was at today 1,306. What's the reason for that correction over the last week or so?
It coincided perfectly with the US CPI print that came through, and consequently, I think set up the expectations that you'll see a very hawkish Fed. So from a question of whether September is 50 or 75, not only did markets, I think, say 75 is a slam dunk, but you've got 1 in 5 betting on that it could potentially be 100 basis point hike. So that's a dramatically hawkish shift, up 25 basis points either way if you look at it. The other sense here is that as markets dwell on those inflation numbers, especially on a sequential read, it went up. In the core readings, it was also a lot higher once you take out the disinflation caused by fuel. There's also a little bit of a reread of what the Fed has been saying. So since Jackson Hole, to sum it up, the message has been higher for longer. Markets sort of came around to the program of higher, though post CPI they've bumped this up. So they expect the Fed fund rates to peak from something below 4% as before CPI. Now they think it's going to be closer to 4.25% or even 4.5% March next year. However, markets are still betting on the Fed cutting rates in the second half. If the Fed this week comes out to say, hang on guys, we're not going to cut so quickly because they are conveying this message for longer, I think that aspect of it perhaps is a reason for markets to bake in some defensive positioning, including taking risk off the table. So even if they want to bet that the Fed will cut in the second half, they know that this is not the timing to make that bet. And so they're hedging themselves by taking risk off the table. And that cascades through. Potentially, one can argue that this is perhaps most acute in the cryptocurrency space, which suffers the double whammy of a strong dollar and higher interest rates. I mean, we did just see US front-end yields, the 2-year yields, now nudging up towards 3.9%. Your 10-year is at about, nudging up against 3.45%. These are quite dramatic climbs, and there's a potential that 2-year yields can go higher if the Fed indeed puts its foot down on the longer part of the higher for longer narrative on US interest rates.
Now, obviously, focus for investors has been the Fed for this week, but the BOJ is also coming out with its policy decision. What are your thoughts on the BOJ action, and also what are some of the key things we should be watching out this week that will move markets?
I'll just add to that cacophony of central bank speak. You're not going to just have the BOJ. You're going to have the Swiss National Bank. You're going to have the Bank of England, and in our part of the woods, you're going to have Bank Indonesia, the Philippine Central Bank, and tomorrow the Chinese Central Bank will be deciding on their 1-year, 5-year lending rate. So it's really the who's who of central banking, except for the ECB. And if you think about it, there are two things here. I mean, one of the reasons why I think the markets are somewhat nervous before the Fed. It's also because of the strong dollar proposition here. The BOJ, I'll answer your question first. Despite the fact that inflation continues to rise in Japan, I think the consensus is that they'll stick to their current dovish stance. So that policy divergence story there is probably going to underpin the dollar vis-a-vis the yen. And the dollar doesn't seem to have a challenger at this point of time. The Europe is stuck is mired in an energy crisis. The supply side shocks, so that's not going to be very good for the euro. We just saw it today, struggling to retain traction above parity. And end of last week, we also saw exceptionally weak UK retail sales and consumer confidence. That means even if you get a Bank of England that's hawkish, it may not fuel upside in the sterling. So there's no challenger to the dollar, which is why markets are being very deferential to the dollar this week. It's not just the Fed, it's just everyone else doesn't look like they're up to it. And I think that pretty much frames up what we may anticipate this week.
Now, Vishnu, as always, thank you very much for your insights, and thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our TV stations, radio stations, and websites that we syndicate our content to. Thanks a lot for tuning in.